Perfect. So hello, everyone. Thank you for joining today's webinar. Iman here, and we have James Prince with us.
Hello, everybody.
Get started.
Do you want me to continue? Do you want to kick off with the intro, and then I'll jump in? I'll jump in a bit.
All right. So today's webinar on how to scale your wealth from $1 million to $5 million. We have had a previous session on how to grow $1 million. So this is kind of a follow-up session as to the next level that we offer to help with in Prindon. I can't move things. Oh, I can. Just a second. All right.
Yeah, we can see that fine.
All right. So my name is Iman. I'm your host for today. We have the lovely Mary with us as a moderator, and our speaker is James Prince, the CEO and founder of Prindon. So what is Prindon, or who is Prindon? So we are an independent wealth management company based in Abu Dhabi. James has been advising families and individuals since 2010. So it's been almost 12 years of expertise in the financial field and financial advisory, to be specific. We have gotten our FSRA license this year, so we are licensed and regulated by we are licensed and a regulated wealth management company in ADGM, Abu Dhabi Global Markets, where we currently are operating. And our main focus is on high net worth individuals, and we help them grow and scale their wealth. So I give you the word, James.
Yeah, thank you very much. Thanks for the introduction, and welcome everybody. Thank you for your time. I'm not sure because I can't see who's attending, but I'm not sure if anybody was here on the previous session, or if you're existing clients or new potential people. But welcome, thank you for your time. And today we're going to focus on the areas to think about and to take action with to grow your wealth from $1 million to $5 million. Now, in some ways, it's actually easier to scale from 1 million to 5 million than it is to go from 0 to 1 million. It does take a slightly different mindset. It takes a different set of habits and actions that you need to be conducting. Most people with a good job that's out in the UAE can build their wealth up to $1 million or maybe to 2 million with a good position, with time and investing into diverse portfolios. You can gain your wealth up to maybe 1 million to 2 million. But to grow it from, really 1 million to 5, just take a different set of investments, a different set of habits, and that's what I'm going to go through with you today. So anybody that knows me, I try to simplify things because there's obviously many different books and people that can be around you that can help you. And these are the areas that I've personally used, that I have seen success in, and it's ones that I believe are effective. So there's 5 key areas that I believe that you can focus on to help grow your wealth. So you've got mindset, you're looking at real estate, stocks and funds, private equity, and going into your own business or investing into somebody else's business. You don't necessarily need to do all 5. Mindset is a very important one, but I think if you focused on at least 3 of them, I think you could at least get to kind of 3-4 million comfortably. So, Aman, if you move over to the next one. What I'll do is because the last webinar that we had was about an hour and a half, and I'm obviously conscious of people's time. It's the end of the day and also start of the week. So I'll try and, if I can, keep this into maybe half an hour and then open up for any questions, because we had about half an hour, 45 minutes of questions at the end. If you do want to put your questions in the chat, and I will try and answer them as I go through, just in case it's relevant to the slides that we're talking about. So the first part is, most of it you'll know me, I'm big on mindset and getting things set up for what you're trying to achieve. A lot of it starts with your why. A lot of it is to do with the goals that you have, the habits that you have. And now we're coming towards the end of the year, and no better time to start thinking about this. You know, if you wanted to set up 2023 and to kick off the year strong, nothing happens by chance. It's all about you presetting everything, your mindset, your goals, your habits, the people around you. You know, and you never achieve results by hoping. Hope is not a strategy. So all of this is achievable. Everybody here can achieve a net worth of $5 million and beyond. You just need to set the mindset up right, set the goals up right, and stick to it. So I've put together some points here that I personally work on that have been successful for me, and I, you know, wholeheartedly believe in. All of this I can put links in into an email. I can send you everything that I've been given. I can happily share it with you. So the first point here, the Kolbe and Print and Strengths Finder. So this is actually to do with personality profiling for you, and if you have a business, people around you. This is really, really key, because if you work on your strengths, you can really become, if you work on your strength for 5 years, you can become a genius at what you do. If you work on your weakness, it just becomes a strong weakness. So the idea is to eliminate or delegate your weaknesses out to other people. You can't scale if you're focusing or working on your weaknesses. So Kolbe, Print, and Strengths is actually the name of 3 different types of profiling testing that can, for you to work out what is important to you, what you're passionate about, what your skill set is. And it's like your DNA. You can't change this. This is what you're born with, and you need to utilize these skills. So many people come to me and say, James, I don't know what I'm passionate about. I don't know what I'm good at. This is, you know, for $50, $80, you can do these tests and find out exactly what you are good at and what your strengths are. Kolbe shows you how you do what you do. The Print test shows you why you do what you do. And Strengths Finder is like your core top 5 fundamental things which is important to you. So, you know, once you've done them 3 tests, which we can give you the links for, that is a great place for you to start. Another one, which is the top 20 farm club. This is really just the people around you. So they always say that you're an average of the 5 people around you. I used to think that wasn't true, but the more I travel around the world to try and do different coaching courses and learn from people, and end up networking and spending time with people which are far beyond my skill set and capability. And it's so true. By spending time with them and talking with them, sharing ideas, learning how they failed and then how they got back up again and then succeeded, it rubs off on you. So trying to make a list, having a book of a list of 20 people currently that are around you, which maybe inspire you or influence you in a good way. Try to keep working on that farm club of people and improving. When you meet someone that is inspirational in a group of friends, or maybe you go to a conference or you go to a network and they maybe share same values as you, or they're doing things that you think, you know, that I look up to them as an individual, go and have a coffee with them, you know, ask them to take them for lunch and learn from them. And everybody likes to talk about their success if somebody else is listening. So this is something that is important to develop if you want to scale. Where do you want to be in 3 years? So this is something I use with a lot of my clients to try to understand where they want to be. If the next 3 years is a successful 3 years, what does that look like for you? Writing it down, whether or not it's for you, it's for the family, it's for, you know, you want to pay off your parents' mortgage, it could be as simple as, we have $1 million worth of assets now. In the next 3 years, we want to try and get it from 1 to 2 or 1 to 3, and journaling and having a look at, you know, what that looks like. Is it through property? Is it through a second business? Is it through investments? So writing down where do you want to be and why is super important. The how and the who to help you get there. So there is always a how to do it, but more importantly, there's always a who that can help you achieve it. There is always a who for a how. Sorry, that I was talking about this with a man earlier, and that sounds a little bit tongue-tied, but it's so much quicker and more successful to find a who than to focus on the how. And one of the books that I've always been talking to clients about, and I can share with you, I might even have a free downloadable copy, but you can get it from Audible, or it's not expensive, but it's such a good book if you're trying to scale and you're trying to find the correct who's around you. So I'll share with you the book later in the presentation. The next part, try to do 2 to 3 uncomfortable things a day. This is something which is, I think, probably the main thing that is going to help you scale. If we do what we've always done, we get what we've always got. So you've got to become, and this might be uncomfortable for some people, but you've almost got to become a different person. You've got to think differently. I'm not saying that your values and things need to change, but you need to think differently about the way that you handle your money, you grow your money, you invest your money. You have to think differently to how you think now. And often to scale or to grow or to do anything that is an improvement, it is uncomfortable. It's like going down the gym, it's uncomfortable. You have pain if you want to grow or strengthen your muscles. So often you need to do things which is uncomfortable, because obviously you're trying to do something that maybe 95% or 98% of the world cannot do. So if you want to become that 1 or 2%, you have to avoid the naysayers. You have to avoid the voices in your head that's saying, no, not today. You know, I don't feel good doing this today. So you have to do uncomfortable things for you to scale. Personally, I don't mind sharing things with you. I start off with a cold shower every day. I don't want to have a cold shower, and every time I do it's horrible. But I do it because that's the first uncomfortable thing. I try and align my body and my mind together. And by doing that, I'm telling my body and my mind that no, even though I don't want to do it, I'm going to, and that's the first thing that I know that I can tick off in the day and move on. So if it then becomes a call that maybe I don't want to do, or it's a webinar that I don't want to do, or it's a meeting that I don't want to do, or maybe it's a conference that I don't want to go to, by doing these things and turning up, you're telling your mind and you're telling your body that I'm prepared to take that next step, to go beyond the comfort zone and step out. And this is why the next part, step out of your comfort zone. You need to evolve into this new you for you to scale. You're not gonna go from 1 million to 5 million with the same habits, with the same actions, with the same day-to-day role, with having the same conversations with your friends. It's not going to happen. So that's what stepping out of your comfort zone and doing 1 or 2 or 3 uncomfortable things a day, and enjoy doing them. The achieving the uncomfortable or stepping out the comfort zone is you becoming a new person. So you almost need to get comfortable with the uncomfortable and embrace it. Appreciate the struggle and the uncertainty. A lot of it is uncertainty. A lot of the things that I do on a day-to-day basis, I don't know if they are going to achieve the results that I set out for. There's no guarantees, but I know if you just keep getting out the comfort zone, taking advice from people which have already done what I'm trying to achieve, read the right books, learn and grow, then I know that it's only a matter of time before I'll get to where I want to get to, and you can get to where you want to. If you're not failing, you're not trying hard enough. Again, this is all about being outside your comfort zone. You have to be trying new things. Spend 30 minutes a day sitting down and write down your goals. This kind of goes back to the first points here. You need to be writing things down. There's no point just having it in your mind. So writing them down, visualizing them, setting goals is super important. Think big and grow into the role. we're covering the same thing, and new people around you. You definitely need to bounce ideas off people. You don't want to be sharing this stuff with people which are going to be saying, you know, why are you trying to do this? You're already successful. You're already, you know, have a lot of money in the bank. If you want to grow, you need to be sharing these ideas with people which appreciate it, which have already done it, which are experiencing the same thing. So if you want to share it with me, I can also introduce you with other people to share it with. So this is all about the mindset, and anybody that knows me, you would have heard these things before. What we'll talk about now is some other areas of the things to actually grow. So real estate would be the second part to help you grow. Even though, if you go to the next slide, Iman, even though real estate is a steadier form of investment, it will do two things for you. One, it will help your mindset. Because if you look at this slide here, if you look at the bottom one here, most people will buy a real estate in cash. So they'll buy $1 million worth of real estate. So $1 million has just bought another $1 million. So you haven't actually scaled or grown your wealth. And if you're going to get a 10% income from that, then that's going to give you $100,000 a year. However, if you look at the top bit here, if you use a mortgage, you can turn $1 million into a $4 million real estate. Now, all of a sudden, you've just scaled you now own $4 million worth of real estate. So your asset value is $4 million. So you've just scaled it 4 times immediately. And what you are then doing is you're having $400,000 a year of income. Now, yes, you're going to have a $3 million mortgage, but the fact is that you've just grown your asset value and you've grown your income 4 times. So this is a great way of scaling. It's a great way of working on your mindset. I know a lot of people that have done this, and the impact that this has had on their mentality and on their focus and on the way that they go out and their confidence has been huge. So never underestimate, you know, what these type of things can do for your confidence and your mindset, and it helps you springboard onto other things. So real estate is a great way of doing it. Stocks and funds. So I think here we actually have a poll for most people, if you want to. So if you was to put $1 million today in the S&P 500, and this is based on the last 50 years of average returns, how long would it take for you to double, for you to generate $2 million? If you just want to answer the question and tell me what you think is the answer, and then let's see.
The poll has been launched. If anyone can answer, I have launched.
You've got 4 options.
Yeah, we have the launch already. We have the poll launched, so people are answering on the actual poll.
Okay.
You have a poll section, James, on the bar on top, I think, or at the bottom. There is next to new share or share screen. There is a poll section. Can you see it?
No.
Okay. No
oh, yes. No, hang on. Yes.
Oh, you can see it?
I can click on it, but it's not happening. No problem. Well, if you've all answered, we can get the polls after, but the answer is 5 years.
Okay, I'm ending the poll, and 67% answered 5 years. So
okay, well done. You're all smart. Okay, well done. So if you go to the next slides, Iman. Yeah, so it's 5 years. So the S&P 500 has averaged 14% for the past 50 years. So obviously history doesn't necessarily mean that that's what's going to happen in the next 50 years, but it's a good indicator. The US is still seeing some really good growth right now. So for just alone, you can double your wealth from 1 million to 2 million by putting it into, you know, a low cost ETF, which tracks the S&P 500. Private equity. So for people that aren't aware of this is for, public equity is stocks, listed stocks that you can buy in as a shareholder through me or through an exchange. You can buy in indexes, ETFs and stocks. Private equity is for companies that are not listed. So you need to either go in through friends and family, or I have access to private equities, or you can go into other VC funds that give you access to these. Now, there's advantages and disadvantages. The advantages are that the returns generally can be anything. If you go to the next, have we got a slide on this, Iman, or no?
No.
Okay, no problem. So the average returns on this, you could be looking at anything from 500% up to maybe 4,000%. So the returns on this can be significant compared to public equity. But however, risks and returns are always in line with each other. So it does mean more risk. Now, for some people, they're happy to take that level of risk because they want to scale. And it's always worth putting a percentage of your money into private equity. It's also an area that you can learn as well about the company, because I've managed to, part of my advice and my role is to get clients into private equity as well if they want to. And it's a way of understanding more about companies and how they scale and how they grow their balance sheets, what they're doing, how they're working on marketing, how they're working on sales, how they're attracting new clients. What does the P&L sheet look like? So it's a way of you understanding another company and how they're growing their money, and also what it means for you. If you, for example, put in $50,000 or $100,000, what does that look like? You can maybe turn that $100,000 into $500,000 or $1 million. But with it obviously comes more risk and also liquidity. In the public markets, you can sell out that day and move to cash. In private equity, you cannot. It might be that you cannot access the money for one year, 2 years, 3 years, or whenever there's next a liquidity event. So if you do want to learn anything more about private equity, or you want to understand about any deals that we have, then I can happily share them with you. But that is a great way of scaling your wealth. Taking it one stage further would be to have your own business. So maybe some of you have it already, or investing into a business, which is kind of like a private equity. A private equity is more like going in a soft way into a business, but actually having your own business, or maybe collaborating with somebody else and putting money directly into the business is what we're talking about here. And this is probably a much slower, longer process, but this is where you would learn the most, maybe have the most amount of emotions and ups and downs, but it's the way to scale probably out of all of these industries, or these five areas. But whenever we've been advising clients over the years, some have an appetite for business, some have more of an appetite for real estate, some don't want to focus on real estate, they just want to look at a business, some just want to focus on the stock market and funds and ETFs because that keeps it simple. You can keep it low risk, and it also means you've got access to capital. Real estate is not liquid. Putting your money into business and things isn't liquid. Private equity is not liquid. So it really depends on, where you are on the scale, what age you are, how long it's taking you to get up to maybe $1 million, how much cash you've got, and what your appetite is. So there's never a hard, fast rule of doing it. A lot of financial advisors and wealth management firms will only advise you to go into public equity, into listed stocks, because that's ultimately where they'll make their money. But that's not what I believe in. It's not the way that I've grown my wealth, and it's not the way that I think clients should correctly diversify. So I've always been a believer of, I practice what I preach, and these are the areas that I think that you should at least be considering if you want to scale correctly and diversify properly. Iman, if you want to go on to the next slide. Okay, so everyone seems to have a to-do list, and if the people that are on the call now on the webinar, you've already got to an element of success in your life. To reach $1 million is a very, very good milestone, and I imagine if you're living in and around the Middle East, you're probably going to be super busy with your day-to-day role and activities. So finding writing a to-do list and picking what you should be doing, I would say is not what you need to be focusing on. What you really need to be focusing on is building a not to-do list. So earlier on, I mentioned about doing the Colby, the print, and the Strengths Finder, working out what is your skill set, and also working out what your weaknesses is. I would say that probably one of the most impactful things that you can do is after you've done them tests, is then working out from your weaknesses, creating a not to do list. Stop doing the things around you that frustrate you, that annoy you, that you say, oh, you know, the ones that go to the bottom of the pile because you just procrastinate and you put it off. Eliminate them. Try and get somebody else to do them if you can, or just remove them totally, and focus on the things that do excite you, that give you energy, the things that you wake up in the morning and you go, I'll do this first because, you know, this is what sets up the day. These are the things that you need to be focusing on. So creating a not to do list, I would say, is more important for you guys than creating a to-do list. Is another slide, man? Okay. So as always, I try to, I'm not great at reading books, so I try to listen to as many books as possible. These are three really good books that I would recommend listening to or reading. Who Not How I talked about before. I can share that with you. It's a fantastic book. It's an idea and a concept that I've never heard anybody come up with before. Everyone always gives you how to build or how to scale, but there is always a who. So that's a fantastic book to read or listen to. Born to Build, you may have heard this or read it before. It's one of the most, I think it's probably 20 years old now. I actually heard about this from Chip Wilson, who I've recommended to a few people before. He wrote an autobiography. He was actually the founder of Lululemon. And he talked about how he scaled Lululemon, and he's now, his wealth is probably 20-30 billion dollars. But all of the issues and problems that he went through on a daily and weekly and monthly basis in his personal life, in his working life. And he recommended this book. And then I read that after I listened to it, and I can see why, because it's a fantastic, if you're trying to build, you're trying to scale, this is something that's amazing. Robin Sharma, he was actually in Dubai, I think last month or the month before. Such a good book about waking up, stepping out your comfort zone, and the activities, habits, and actions to build around you. Such a good book as well to read or listen to. So these are three that I would try and get a hold of and swat up on. And then podcast wise, if you want to go to the next one, Iman. Two good podcasts here. 10X Talk is a great one. Dan Sullivan is my coach that I go to, and he's trying to get me to 10X, the activities and things around. So that's a really, really good one with Joe Polish. Great guys. And then Joe Polish has also done a podcast on marketing. Now, actually, marketing and sales is such a, I guess, taboo word or phrase, because everyone goes, oh, I hate selling, or I hate marketing, or I don't want to do that, or I don't want to sell anything. For you to scale, you need to learn how to sell and how to market. And if I'm not talking about product, I'm talking about yourself. You know, I mentioned earlier about maybe you go and meet somebody at a conference, or you meet somebody who's a friend of a friend, and they inspire you, or you think, I want to go and have a coffee with them. You need to learn how to sell yourself to that person for them to want to have a coffee with you. You know, why would they share all of their secrets with you and share half an hour talking to you about their problems and how they succeeded? So I know so many people that think that selling or marketing is a horrible job or a horrible thing to do. And, you know, for us to meet our wife or our partner or our husband, or for us to get the job that we've got, we had to sell ourselves. So, you know, it's remove the the phrase of selling, and these are the two things that will, sales and marketing is one of the most powerful things to help you scale. So I've tried to breeze through that as quickly as possible, because I can go over this with you individually. I can share with you the slides from the podcast, but I wanted to maybe open this up to see if anybody had any questions that you wanted to type in the chat, and I can answer them and go through them one by one. So yeah, here I've said you can send an email to info@prindon or james@prindon.com, where I can send you the slides from the webinar, send you the recording. If you wanted a financial review or you wanted a free consultation to talk about how to scale your wealth, that's what we're here to do. And but yeah, if anybody has any, I think there's some questions there, but I can't. That's up from you, man. So yeah, does anybody have any questions so far that they would like to type into? And you can keep it anonymous if you want to type into the chat. Maybe you've got something about investments, something about property, something about markets, something about mindset. Let me know if you have anything that you would like to ask. Not yet. Maybe you're all a bit shy. Okay, maybe I can talk a little bit more. So sometimes people ask about, oh, Iman, are you going to say something?
Yeah, I was going to say, if anyone wants to say anything, you can just raise your hand and I'll give you the word. If you don't want to write it down, if you want to speak to James, I can. All right, I got some hands raised. Let me check them. We got Ahmed Al-Bahar. I'll allow you to talk.
Hi, thank you very much for all of you, and James, it's good to see you again. The first thing
Hi, Ahmed, nice to see you again. Hope you're well.
Good, thank you. I think the first thing I want to say is the chat is being disabled, so I think if you enable it, you probably will receive some questions.
Okay, thank you for letting us know.
My question is there any recommendation with the instability and the expected economic downturn? Is there a safe investment you would recommend between what you just proposed, business, stocks, or real estate? Thank you.
Okay, so really good question. Thank you, and obviously timely with what's happening in the world and the economy right now. So the short answer is the safest thing to do is diversification. None of us have a crystal ball. The economy does have to grow. It does have to improve. It does have to go to new values, new heights. Otherwise, you know, the economy doesn't survive. It's like breathing. It has to grow. The point is none of us know when. And the reason for diversifying between stocks, equities, real estate, businesses, private equities, is because you're always going to have external things that happens, whether or not it's COVID, whether or not it's a war, whether or not it's a recession. You're always going to have, and we're going to continue to have in our lifetime, external factors outside of our control, and these are always going to knock the markets. One of the biggest contributing factors to volatility is our ability to trade, is our ability to view markets. Previously, 20, 30 years ago, the only way that we could look at stocks and shares and property was through a newspaper. We didn't have applications where we could see markets moving throughout the day that was live. We couldn't go onto trading platforms and buy and sell and leverage. So markets are so much more volatile right now, and this is only going to continue to grow. I don't see this going back to how it was. So I think you have to have a strategy. You have to diversify. You need to look at your goals and what you want to achieve, and then make sure that the investments that you pick is in line with what you want to achieve. You know, so many people went into crypto just for the sake of going into crypto, and some people got their fingers burnt, and they didn't need to take that level of risk. You know, there would have been someone that maybe had $1-2 million of wealth, and their goal, you know, whether or not it was to buy a second house, or to reach financial freedom, or to pay off their mortgage, or to put their kids through good university, they could have achieved that just by investing in the stock market and maybe getting 10-15% growth a year. Did they really need to go into a new currency, a digital currency that was unregulated, to scale their wealth? You know, you'd argue probably not. So a lot of it is picking the investments that aligns with your goals. And even though I would like to say to you, yes, put your money into this particular investment and that's safe and it's guaranteed, I'm not going to say that. And I think the advice here is diversify. You know, if you're going to have real estate, diversify your real estate. Look at maybe different countries, different currencies. Maybe one's an apartment, one is a villa. If you're going to have stocks, look at different stocks, funds, ETFs, different currencies to invest in. I always, with stocks, look at certain areas. So you might look at technology, you might look at healthcare, you might look at things like the stocks that you would focus on, the rich and the wealthy, like LVMH and Ferrari, and also stocks which is everyday stocks like McDonald's, Procter & Gamble, Johnson & Johnson, which can be bought with daily consumptions. So just diversify. If you're going to go into private equity, diversify into private equity. So just diversification, I think, is the key. Any other questions anybody has? Iman, did you disable the...
Yes, I have. Hannah, I have given you...
Okay, thank you, Ahmed.
Right?
Yeah.
Right.
Did anybody else raise their hand?
Yes, I got Hannah. Hannah or Zakaria? I'm not sure if it's a woman.
Hannah.
Yes.
Oh,
hi,
hi.
Hannah. Good evening.
Hi. Good evening. Hi, James. I just want to ask you, I mean, for investing in the real estate, is it now, how is the real estate in UK now? Because, you know, I have an inquiry about that.
Okay, well,
yeah.
Thank you for your question. And it's a great question, because obviously what's happening right now is we have hyperinflation, which then means that interest rates have to be increased. So you will have seen interest rates around the world have increased 2-3%. And that has a knock-on effect on, if you're going to borrow money, it has an impact on your borrowing, which ultimately short-term will affect the return that you can make on real estate. If you're going to buy cash, I think now is a good time to be buying. But if you are looking, remember the slide I mentioned about how you can maybe turn 1 million into 4 million. If you are going to take a mortgage and you're going to borrow, I think temporarily for maybe 2-3 years, I don't think you're going to make any income from the property. Having said that, the reason why interest rates have increased is because we have high inflation. And when we have high inflation, it means that the value of your property is increasing significantly. Now, in the UK in particular, properties used to double on average every 13 years. There was points in the 70s and 80s where property prices doubled in 7 years. And they're now saying we're going back to that period right now where they're talking 5 to 6 years, properties in the UK is going to double. So if you own a property for £500,000, they're saying by 2027, 2028, it'll be worth £1 million. So in some respects, it's a great time to buy. But previously, whenever I've advised clients to buy for investment, you always wanted to try and get two things. You wanted to try and get an income, and you wanted to try and get capital appreciation. So when interest rates and mortgages are high right now, I don't think you're going to get any income in the next couple of years whilst rates are high. But I do think that you're going to make a good return on capital appreciation.
Okay, thank you. Thank you very much.
You're welcome.
And can I ask another question?
Sure, of course, of course.
Yeah, where because I learned that in London, the property prices are going up the roof, and it is not easy to find anything even around London in little towns. And I just wondered, where is the opportunity like to invest in property? Which cities are available in, like you can find good property to invest in for income? Hello?
Okay. Well, another good question. Yeah, no, we can hear you.
Yeah.
So her question really was about where to buy in the UK.
Yeah.
So traditionally, if you'd always bought in the north, you would have more income and less capital appreciation. If you bought in London or south, you'd have more capital appreciation. But by the fact that the property is growing significantly, it means that the income, the percentage of income would be lower. So traditionally, you would get maybe 3% of income from a property in London, but strong capital appreciation. In the north, you would probably get 5, 6, 7, 8% income, but much lower capital appreciation. That still is true to this day. If in the outer skirts of London, and recently the Crossrail line that the UK have been working on for, it seems forever, but I think 10 years, that is now open. It opened in May this year. So that links in the outer cities or outer towns in and around London. It connects London much more. So it means that, previously, which would take maybe an hour to get into London, you can get into London now in 15 minutes. So these areas are out of London, you're seeing good growth and you're also seeing good income. But it depends really on what you're looking for in your budget, because obviously the outer skirts of London and the north, you're much cheaper than if you're going to be buying in the centre of London and Knightsbridge. And you also have to factor in, if you're buying in the centre, the fees for the year to service the apartment, the land service and ground rent is much higher than in the outer skirts of London and in the north.
Yeah, true. For example, if somebody like 150,000 to invest in, where can you find a property to invest in?
Well, that depends on, so it depends if you're buying cash, because then if you're buying cash and you're not mortgaging, then you need to look for a property which is 150. If you are mortgaging, then you can try and find something for 450 to 600. So if you're looking for something 150, you definitely need to be Birmingham, in and around Liverpool, in the north, because you can find property there for 150. And if you are taking a mortgage and you're looking for something around 400 to 600, then you can find something on the outer skirts of London and more central.
Okay, so around 400.
Yes, yeah, you can find something in and around London for anything from 300 to above.
Oh, thank you, James. Thank you.
No problem, Hannah.
I'm gonna give the word to Abdullah.
Okay. Hello, Abdullah.
Hello, James.
How are you?
I'm good. What about you?
Yes, all good, thank you, all good.
Okay.
What's your question?
Which way from the ways we talked about today you consider is the best for making money at a young age, or to start making money at a young age?
What is the best way to start making money? Hang on, I think maybe we've lost him everywhere, man. I don't know if his reception's that good.
I mean, he's unmuted, and
Maybe he
Abdullah, can you
can.
try to mute and unmute your mic just to see? Or maybe he's having connection.
Hello?
Hi,
Hello?
Abdullah. I think maybe
Yes,
we're struggling
my
with
bad,
it.
my
Is
bad.
it?
It's my
Okay,
internet connection
okay.
was,
Looks like he's back now.
unstable.
Yes. So your question
So,
is.
yes, my question was, which way from the ways we talked about today you consider is the best for making money at a young age, or start to make money at a young age?
So what I would do is we can send you the link to we did a webinar a few weeks ago, which was how to grow your wealth from 0 to 1 million, which is a different set of habits and focuses than this today. So what we can do is we can send you the link for the video and that to focus on, because it's different. It's different than what we're talking about today.
Okay, of course, I don't mind. Thank you a lot.
No problem. Thank you.
We can still take someone else. So if anyone wants to ask any question, you can raise your hand and I'm going to give you the word.
So we've had a question on real estate. We've had a question on the markets. Does anybody have any question on the mindset side of things? Does anybody have any question on private equity?
Okay.
I mean, unless a lot of people used to say, you know, where do you start? Like, how do you start with any of this? And often the thing is just to put one foot in front of the and actually make a start. Start with the book, start with the podcasts, make a list of the people around you. That's probably a great place to start. Whether or not you connect with me or you connect with friends or people around you, which you look at and say, look, how have they done that? And ask them. So a lot of it is just making a start and going down that almost that uncomfortable, an unknown path, and just finding your own way. There's not, you know, I've got my way, but you will ultimately find your way. There might be some of these things in here that you say actually don't work for you, which is fine. These are the ways which I've tried over the years and have worked for me. But ultimately, you just need to make a start and pursue the path and just keep trying, and you will fall down, but then you'll get up again and you'll try again and you'll fall down again, and just keep taking one step at a time and moving forward.
Okay, it seems that we have, oh yeah, we have a question in the chat section. So an old-fashioned way of investment is buying gold. Any thoughts on that, James, please?
Okay, another question, and it's a good point really, because gold used to have a place for in two ways. One, it used to be a safe haven. It used to be an alternative to equities. So it used to be, you know, stocks, bonds, and gold. And when stocks was up, gold and bonds were down. And when stocks went down, gold and bonds were up. And it just used to be a seesaw effect. Also, gold used to underpin the cash reserves in the economy. So they could only ever print as much money as they did have as gold reserves. Gold used to be also in the last 20 years with new currencies. I say new currencies, there's you've got digital, you've got fintech, you've got stocks, you've got applications. So much has changed. The landscape has completely changed, and gold isn't what it used to be. So I feel, you know, every investment is a trade. There has to be a supply and a demand, and the value is ultimately what is created by the supply and the demand. So something is only worth what the other person is willing to pay. You know, you might have real estate and someone values it at $10 million. It's only worth $10 million if somebody is willing to buy it. If no one wants to buy it, all of a sudden that value comes down to 9. If no one wants to buy it at 9, it might have to come down to 8. So ultimately, gold used to be seen as a safe haven, and maybe you might want to put 10 or 5% or 3% of your portfolio into gold if you wanted to as a safe haven, but I don't see it as a growth asset. It's more of a safety net, and maybe that's how you diversify, you know, your cash, your bonds. You know, I would argue that jewelry, diamonds, and jewelry and watches, I would say, will have a greater safety than buying gold. You know, if you think about, you know, the world and that we're in, and we might need to, you know, if you remember the banks with Greece a few years ago, and the country completely blocked access to any card machines, any ATM machines or withdrawals from the bank. If you needed to get on a flight and move around the world, you're far better off having jewelry and diamonds than you are trying to lug around chunks of gold. So to hold, but I wouldn't see it as a growth asset class. It's more of a protect and reserve. But good question.
Okay, anyone else just before we end the session? Okay, let me see.
We've kept it inside an hour, which is nice.
Yeah. Time. Well, it seems that nobody has any more questions.
Well, thank you, everybody, and it seems like you've all stayed online, so appreciate that. I hope you found it useful. I wish I had a secret formula to tell you, go and do this and you'll turn 1 million into 5, you know, in a week. But anybody that gives you that advice, you definitely need to run away from. It's just about working hard on it, being consistent, and there are going to be times when it's uncomfortable. There's going to be a lot of doors that slam in your face, but just keep persevering, keep digging deep. I will be here to help you if you need any support. If you want to run anything by me, let me know, and we can send you out the slides from the webinar so that you've got the points that we've talked about, the different sections. You've got the books and the podcasts, and yeah, anything you need, let me know. If you do the tests, by the way, share it with me so I can walk you through it. I did mine a few years ago, and I've been thinking about these on a daily basis. So I strongly recommend it for everybody here that is serious about growing. It will really open your eyes to your strengths and your weaknesses and the things you need to focus on moving forward. So thank you for your time. I appreciate you taking your time at the end of the day to listen. I hope you found it useful. Keep in touch, and hopefully I'll chat to you all soon.
Well, thank you, James, for this informative webinar. Thank you everyone for your time. Do not hesitate to reach out via email. So it's the email that is on screen. So info@printon.com for any questions that you have, for any requests, or to book your consultation perhaps. You can get a free consultation with James to discuss your financial goals further and understand how you could get to them in the time that you have in mind. So we would like to have you again in our next webinar. So follow us on social media. So printon.en. We will keep you updated for all next webinars, and we will have the links sent out to your emails as well. We'll keep you informed via email. Thank you for registering. We have now kept your email in our database for any future